Hi everyone, let's have a look at my bullish and bearish medium time frame and low time frame Elliott Wave scenarios on Bitcoin, including potential trading setups. Starting with the bullish medium time frame scenario, where we're looking for a three-wave structure in a WXY, with inside the final wave Y, which has to be a three-wave structure, another ABC over here, where a rare target for wave C is a 1.618 pulled from the high of X to the low of A to the high of this wave B. Now I gotta say that this wave C is a lot longer in time and also in length compared to wave A, so actually my other scenario might be more likely, which is coming after this one. But in this particular scenario, this would then be the end of wave C and Y, and we're looking for a move towards the upside. The main reason why I'm looking at this wave to be a wave C, another wave 3 and an impulse in a 1, 2, 3, 4, 5 has to do with the volume that we get in this move to the downside, because the volume has not been very impressive. Yeah, we have a bit of a spike over here because of the news, but in general the volume is very average compared to the volume that we had in wave A and the volume that we had in this move to the downside over here, which actually is higher than the move to the downside over here. So yeah, I'm looking at this wave to be a wave C, but if this is the right count, that is the question, because the 1.618 is a rare target, and also this wave C is a lot longer in time compared to this wave A. You can count like a 5-wave structure in this move to the downside, so this could be the potential end. But I do think if this low is going to be taken over here, I would look for more downside, where the yellow target box is going to be the next area of interest at 24,850 to 24.3k. And then the other scenario, which might work a bit better, but I'm not too happy with the wave B. So both of the scenarios have something, I guess, that isn't ideal, is that this is a 5-wave move in an A, then we have a 3-wave in a B, and then this is a wave C. Now in this particular scenario, I also pulled a fib time taken from the high of A to the low of A to the high of this wave B, and those are the vertical lines that you see on the chart. And it basically means that the 1-to-1, the white vertical line over here, that is the length of wave A, exactly the length of wave A compared to wave B. So if wave B, or wave C, sorry, so if wave C is gonna hit the 1-to-1 over here, it basically means that wave C is the exact length in time compared to wave A. As you see now, this wave C is at least the 0.618 fib time from wave A, so that is nice. That's actually a good target already. And as you can see, also between the 0.618 and the 1-to-1, this wick was made on the lower time frames as well into the 1-to-1 most common target area for wave C, pulled from the high of A to the low of A to the high of this wave B. That's how you get this target area for a wave C. So also here the 1-to-1 has been hit, and with the other scenario the 1.618 has been hit, so that is actually quite nice. But then again, if price would move to the downside once more and hit this little wick, then I think price might continue to the downside, where the 1.236 is still a very valid target for this being a wave C at 25k. But of course price might move into the yellow target box and then eventually range around here for then more upside to come. So that's also why with a potential trading setup, better be safe than sorry with the stop loss, I suppose, instead of having a very short 0.1% stop loss and looking for 100x. You know, that's not gonna happen usually in trading. It's better to have a safe stop loss, better safe than sorry, entry somewhere over here, stop loss below, looking for upside. No financial advice. This is of course based on Elliott waves, because for this wave C, a rare target is the 1.618. You definitely don't expect this 1.618 to be hit in a potential ABC over here. So if one enters in this area, stop loss below is at least a safe stop loss in my opinion. But again, you have your own plan, you need your own strategy for trading, and it's always good to look for some additional confluences. Also with this trading setup over here, if price is moving to the downside, maybe you want to see some bullish divergences on one of the indicators that you have, or you want to maybe see a break of structure and then the entry is over here. Whatever works with your plan, right? If we then zoom out and look for the confluences, I actually have a few confluences on the chart that might be used as well in a potential trading environment, right? Where this is a volume profile of the whole range starting from the 17th of March. And the white box that you see over here is the order block on the 4-hour. And as you can see, we're actually ranging right against this order block, but the goal is of course to go above if we are looking for upside. So what you see is the volume profile. They always say trade the range until it breaks, and if we manage to get back into the value area low, which is the blue line here at the bottom, if one might get back in the value area low, then have a bit of a retracement, continue up, take the high, that might be a pretty good sign where price might move to the upside, the value area high, if not higher, towards maybe the 2022 range highs at 32.4k. So that could definitely be interesting, because you can also see that over here we had a little bit of a range below the value area high. Once we got in, we moved to the upside, a little bit of a range above the value area high over here. So this is the value area low, sorry, above the value area high, got back in the range, moved to the downside, and you can see it's just going up and down all the time. So if we might manage to get in once again, upside might be interesting, and the value area low is sitting at 27.150 basically. So that's an interesting level. If we then go to the lower time frames, we're first looking at the bearish scenario, where this is a three-wave structure in an A, B, C, which is then part of a wave W, and then this sideways ranging structure is still part of a wave X, after which we then expect a wave Y to the upside, which has to be a three-wave structure. Now you can see the fibs over here that are actually pulled from the low of this wave A to the high of this wave C, because if this is one corrective structure, you have to take it from the low of wave A. So that's what I did, and as you can see, the 382 has been hit, which is a minimum target for a wave X. However, a wave X can go all the way to the 886. If this wave X would go below the 886, yeah, it might start to become likely. We're going to take this low over here. Of course, you could pull the fibs all the way from the low over here and have a little bit of an extension, but if this is a corrective structure, you want to start taking the fibs from the beginning of a corrective structure, which here is the wave A and not the low of this wave B, because the wave B is obviously the middle of this expanding flat corrective structure. So in this particular scenario, this sideways range is then part of a wave X, after which we expect a wave Y to the upside. And if this would be the low of wave X, we pull a trend-based fib extension from the low of A to the high of wave C to the low then of this wave X. I put on my wave Y targets, and you can see that the most common target area for wave Y is in between the 1 and the 1.236, which is between 27.4k and 27.6k, which might actually be an interesting level, yeah, right, because we have a 27.7k daily naked point of control right about that level as well. So this daily naked point of control is very, very important resistance for price if price wants to look for more upside. So that's something to look out for at least. And yeah, trading a potential wave X is very difficult because you never really know where wave X is going to end. So the stop loss is, you know, if you enter over here, the stop loss is massive, right? All the way below the wick. So yeah, not ideal. So it's better to wait and see what X does, or just wait for Y. Now, how do you know if this is going to be a wave Y in a three-wave structure, or in the bullish scenario, we're going to look for a 1, 2, 3, like an impulsive structure, right? Where this is a wave 1, then we're looking for a corrective 2, and eventually we're looking for a 3 to the upside, right? Well, actually, it's a bit twofold. So if price moves up right now in a wave Y, for me, this whole structure over here is going to be a WXY. Why? Because the 382 has been hit for wave X, pulled from the beginning of A to the high of this wave C. And also, this is a very sideways, more complex structure, while usually a wave 2 is a more simple structure. A wave 2 tends to be a zigzag, which is a 535 scenario. Now, of course, that can't be true anymore because the high over here has been taken, like this wick took the high over here, and in a 535, that is not allowed. So therefore, you know, it's a bit less likely it's a wave 2, but a wave 2 can also be corrective. But my main thing is actually the fibs. So in the bullish scenario, you take the fibs from the low over here to the high of wave 1, because now this is your first structure, which means that a minimum target should be the 382, which is a rare target already for a wave 2, because the most common targets for a wave 2 are between the 0.5 and the 0.786 fib. So you actually want to see wave 2 enter or reach the 0.5 as a bare minimum at 26.4k, to the 786 at 26k, and in the middle you then have a daily naked point of control, which I actually like to be hit then, so at 26.350. So this is a little bit of a difference. And then eventually also another difference between a wave 2, like a bullish scenario 1, 2, 3, 4, 5, or this being a WXY, is the move that you then get to the upside and the volume that is part of that move to the upside. Because if this is a wave 1 and then a wave 2 and then you get a wave 3 to the upside, then during this wave 3 to the upside you definitely want to see volume pick up. You know, volume should be increasing a lot while price is moving to the upside. And also, if price is moving to the upside, you want to see it move up more and more parabolic, basically, like vertical, right? Wave 3 is usually a powerful move. So that's what you're looking for: high volume, high candles, big candles to the upside. And if this is the more bearish scenario in a wave Y, then you don't necessarily expect a lot of volume to pick up while price is moving to the upside. Of course, there can be volume, but not as much as a wave 3 and not as parabolic, especially in a wave Y. A wave Y tends to be a more like ranging structure, I suppose, a bit more horizontal, and not necessarily an impulsive structure like this for a potential wave 3. So those are some of the differences. But as it stands now, most importantly, if price is going to continue moving to the upside, then only the wave X target has been hit, the 382, pulled from the low of A to the high of C, and not the wave 3 target. Or the wave 2 target, sorry, that is over here, right? So that makes it more likely that the bearish scenario might come through, and that we will find another move to the downside. So we have to wait and see how price is going to develop. It's Sunday, and especially with all this ranging going on, I mean, you can enjoy the weather as well, have some fun, touch the grass, do stuff with family and friends, and then on Monday see where price is, because yeah, we've been ranging so far the whole weekend, which of course is typical for a weekend anyway. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame scenarios if you're interested. And for now, thanks for watching and subscribing. I'll see you at the next one, which will be my macro and high time frame video coming today at 7 p.m. because at 1 p.m. I will be gone for the day with my family. So see you then. Bye bye.